Joining us now is Rizzo, portfolio manager at T. Rowe Price. Dom, is Renan right?
Well, first off, thanks for having me, John, and all the reporting at CES was great. The NVIDIA interview, the AMD interview, the vast data, they were really fabulous. Yeah, I do think he's right. We're really in extreme shortage for the entire memory industry right now, whether it's DRAM or NAND. The way we've primarily allocated in our strategy is through Hynix because of their leadership in high bandwidth memory, but we're seeing tightness across the entire memory supply chain. And I think what we're going to see is the memory and logic continue to come closer together, and that's why we saw that Bluefield DPU announcement out of NVIDIA this week at CES as well.
But Dom, there is no area of tech more infamous for boom-bust cycles than memory, right? So how should investors navigate that? Is this stretch of time when there's going to be this AI-driven demand for memory so long that there's more upside significantly to some of these stocks, or is this a time to really get choosier?
Well, you know, the issue right now in memory is we basically have a completely inelastic demand curve, right? It's whatever the price is, people are willing to pay it. And the question on a lot of these stocks is what's going to actually happen come the quarter, because, you know, everyone's doing simple math. Memory prices are up 50 to 80% over quarter over quarter. What does that mean for earnings? And the reality is that this is going to take a few quarters to play out, right? Because much of the demand is already contracted from 6 months ago when many of these contracts were written. So I actually think the best way to invest in the entire space right now may be semi-capital equipment. You know, you have names like ASML that have just started their move higher, still trade at relatively reasonable valuations, and I think will benefit from this memory upcycle. And that memory upcycle will always be coupled with a logic upcycle, right?
Okay.
They go hand in hand.
So is this good or bad for names like Pure Storage and NetApp, which I guess in a way still need some of this allocation, but also are trying to add value on top of it for some of these data center systems?
You know, I've always struggled with those names, to be honest, John. I've really struggled with this concept of being able to add value on top of that memory storage, particularly in the context of NVIDIA attacking every problem from a systems architecture perspective. So I'd just say remains to be seen.
It sounds like you're, in a way, trying to stay away from the core players in this space because they break your ankles so often, and that's why you're looking at the semi-cap equipment. Am I reading you right?
Well, I think, look, we have Hynix, we have Samsung. It depends on the situation. But what I'm really trying to do is make sure that we navigate all the different markets responsibly. And I think that semi-capital equipment is the best way to play both memory and logic. And what I'm so excited on the logic side is that I think we actually are really in place for a CPU renaissance in 26. I think that's the part that the market's completely missing right now. AMD and Intel should see fabulous growth on their core CPU business heading into next.